Hi everyone, Hal Levy at payment.com once again, and for this conversation, I am joined by Eimear O'Connor, who is the Chief Product Officer at Form 3. Welcome, it's nice to have you.
Delighted to be here, Hal.
We are discussing today operational burdens, specifically the burdens on banks in an age of faster payments. So, when we think about that, let's talk about the reality. Faster payments are going to become more entrenched here in the United States. They're already there elsewhere. But as we look stateside, and we look at some of the challenges that are specific to banks, what are your thoughts about the operational challenges that are most immediate right now? And what are the stressors that are there for back office teams that haven't been there traditionally and now all of a sudden are front and center?
Yeah, absolutely. It's certainly very interesting to watch the growth of instant payments in the US. Clearly, still in the early days of adoption, but the overall growth, of course, is very promising. One of the very clear and interesting dynamics to emerge over the last few months, particularly post the launch of FedNow, are that some of the key challenges that are emerging from our conversations with banks is actually down to the lack of full interoperability between FedNow and RTP. For many banks, interestingly, this is indeed requiring two separate technical bills and potentially even separate operational processes in their back offices. And this is being driven by the degree of difference in both the FedNow and RTP specifications and overall rules. It's a substantial headache and genuine operational and technical challenge for a lot of US banks. There are also clearly challenges in the processing of instant payments themselves. We're seeing this particularly in terms of exception processing. Many of the processes are still new when it comes to instant payments. And although these payments are growing, they are still in their infancy. And even those banks who have been early adopters of RTP are still likely to be adjusting to the changes that FedNow is introducing. So big challenges for back offices and a lot of work that has to be done to streamline and align against those. These are some of the key drivers and some of the reasons that we at Form 3 are very much looking at how we develop our product to specifically allow a scheme agnostic build at the bank side. We believe it's hugely important for payment providers like ourselves to really think about how we do the heavy lifting to ensure that that is minimized on the bank side, and that when banks do send payments from an instant payment point of view, that actually providers like ourselves can take those payments and then route them to the preferred scheme based on where the beneficiary is. The objective here is to really minimize that operational and technical impact for the banks, and really ensure that the banks kind of, when they look at that instant connectivity, how can they avoid dual projects, dual bills, and ultimately dual processes within their back end?
The technical challenges are there for sure. Obviously, there are different considerations with messaging and all sorts of data. But I think that forces the teams themselves to re-examine what they do and how they do it. When you think about what might be the most glaring workflow to be addressed. Is it the manual aspect of it? Is it the fact that, as you mentioned earlier, looking at exceptions, looking at the flow of data, the fact that the window of examination is closing so rapidly? What does an operational team have to look at first and then longer term that they have to address? The technical challenge are one thing. The workflow, the way it's always been done, is another thing. How do you move the needle on that?
Yeah, no, completely, and that's exactly what we're hearing from the banks that we're talking to in the market. I think two significant pain points are really jumping out. One is processing in a real-time environment when back offices weren't necessarily set up to operate in that way, and the second one is around reconciliation. The processing side of things is a significant pain point. Many of the banks are still in the process of moving from what were batch and overnight processes, things that happened in the background that were invisible and were not time sensitive. And suddenly these are front and center with the expectation that processes happen immediately, and importantly, that funds are applied immediately. It's a significant hurdle that many banks still need to overcome. And real-time payments are, of course, by their nature, 24/7, 365. And that activity is one that requires a response and an immediate response. And clearly, as instant payment grows, actually the expectation from a customer point of view that that payment is instant also grows very quickly with it. The second biggest challenge is certainly reconciliation. Again, because all of these processes were typically built around end-of-day concepts or batch approaches, in a 24/7 instant world, that really doesn't work. So redoing how the bank approaches its reconciliation, both to the schemes and to their customers' accounts, is absolutely critical. Again, we think this is a significant reason why, from a provider point of view, we feel that a platform approach to instant payments is a real game changer in how US banks choose to implement their instant payment strategies. By having that unified platform, this should really allow banks to align and streamline their operational processes across both of the instant schemes, allowing for a lot of unification that wouldn't otherwise be able to happen.
Let's I want to be careful of sounding too, I'll use the word doom and gloom about, or too cautious about what needs to be done. Let's look on the other side of this, which is the potential once these processes, and to your point, reconciliation, when things go a bit more smoothly, there is opportunity for banks to transform what they do, who they serve, and how they do it. So I'm talking specifically about microservices, right? The idea of payments as a service has a greenfield opportunity right in front of it for the FIs that are forward thinking, that can get their arms around the technical and operational burdens. So I'd like your thought. Let's talk a little bit about the ways in which FIs can start to think about instant payments and microservices strategically and in a proactive way.
Yeah, and it's a huge development, I guess, in terms of how technology is developed and built, and the tools that are available in that environment over the past kind of 5 and 6 years. And one of the huge benefits, both from a microservices and payments as a service type model, is that by their very nature, they offer and are designed with flexibility and the future in mind. So the services must be adaptable to multiple schemes and how these evolve, and therefore by design are using the tools from a cloud development point of view to be both configurable, secure, scalable by design, and very focused on understanding how that develops and provides the right services, both, I guess, in the back office, but as you rightly point out, how that then comes together to allow banks and financial institutions to think about offering specific products out to their end customers. Cloud native microservices approach, like ours at Form 3, typically provides a multitude of benefits. And from a payments as a service point of view, a fully managed payments platform really does, I suppose, free banks from the requirement for them to manage that platform themselves on a 24/7, 365 service management basis. This also means when banks look at kind of payments as a service models, they are able to truly outsource the burden of not only running the technology today, but really importantly, ensuring that it evolves to meet the future needs of the banks themselves and the schemes that they connect to. Many banks and providers like ourselves are also looking at how we roll that out across, I guess, from a resilience point of view, which again becomes hugely important in a real-time environment, on multi-cloud platforms, giving that added resilience of being able to run across multiple cloud providers, and therefore offer banks a significant level of resilience, and importantly, independence from individual cloud providers themselves. I think that accumulation of microservices and payments as a service offerings also includes the ability for banks to seamlessly adopt additional services, both within and during the payment flow itself. And that becomes really interesting when banks begin to look at potentially orchestrating flows to allow, real configuration of products along an instant payment lifecycle, but also data services that then they can either push back out to their customers or internalize in terms of fueling their internal systems, their internal services, and ultimately helping them to define the end products that they provide to their customers.
A lot of what we've been talking about thus far are recognition of the immediate challenges that are there and anticipating maybe near term what can be offered. We're talking about microservices here. What about the idea of future proofing? Future proofing can take two avenues. One is future proofing can use technology, right? So it's automatically updated and ready and acclimated to what's coming. Future proofing also can be a strategy and a mindset. I'd like your thoughts on both of those.
So I think from a technology point of view, it's a really interesting time, I think, for banks in terms of how they make their technology choices right now. And some of that will be big decisions between in-house build and using, I suppose, external providers as technology kind of sourcing for those banks. Clearly, from an in-house build point of view, when you think about, I suppose, becoming future-proofed, I think it's hugely important that banks think about, we're not just investing for today. This is very much about we are making this investment decision now, but we will also have to go on a journey of continuous investment against that technology. It's not a once and done. And I think, with the differences that we are seeing in terms of the instant payment schemes already, I think that is becoming very clear. And there is no doubt that these schemes will also develop over time. They will absolutely want to evolve as the, use cases for their services become very clear in the market as well. So I think from a bank point of view, it's hugely important that they think about, how do I make that investment today, but how do I also ensure that I have the budget and the focus to continue that investment in the future? I think the second piece that you mentioned, I guess, is very much a mindset piece around where does instant payments and the infrastructure of instant payments take banks for the future? And I think for me, this is very much about a future-looking agenda on product innovation. So how do you take the baseline instant payment infrastructure and begin to think about, what are the use cases that really drives for my customer base? Where are the payment pain points that actually I can build interesting and competitive and compelling payments products opportunities around. And that may be targeting the card space. So, in areas where card payments are traditionally used today, and or it might be targeting kind of higher value and therefore higher cost payment use cases where actually instant payments can play a significant role in reducing the cost associated with delivering those payments in an instant manner.
I think so. To your points earlier, it is a continuous process. It's not a one and done. But even though it is continuous, there is always room for innovation. And I think also, operational efficiency. So I think the FI of tomorrow, a few years hence, with instant payments here in the US, is not going to be what we have seen today. And that's a great point for us to end on for today. And until the next time, I'm sure we'll have another discussion about where we are and where we're headed. And thank you very much.
My absolute pleasure. Thank you, Al.
Thank you.